Good morning, everyone. Welcome to April 9th Market Minute. I'm John Hopkins, president of Invested Central. Right now, we got the Dow futures down 120, the S&P futures are down 14, and NASDAQ futures are down 28. Asian shares were lower, while European shares were mixed overnight. The market was closed Friday, but that didn't stop the government from releasing March non-farm payrolls. The numbers were much weaker than expected, setting up the possibility of lower prices on Monday. Thus, the fallout from the weak numbers will have to be dealt with after traders have had the opportunity to absorb the news over the long weekend. Today, there are no key economic reports due out. There are no key earnings reports due out today. On the S&P, we've got the 20-day moving average at 1397, the 50-day at 1370, and the 200-day at 1269. The S&P closed at 1398 on Thursday, with support at 1397 and resistance at 1425. The market lost some ground last week with the S&P down 10 points by Thursday's close. The S&P did manage to hold its 20-day moving average at 1397, but could be subject to further selling this week after last week's weaker-than-expected jobs report. The S&P got as low as 1392 on Thursday before bouncing, and if that should go, then the 50-day at 1370 could come into play. The bulls know the importance of holding that level and aren't likely to let it go without a fight. Here's a bully trend fact. Since 1988, the Russell 2000 has produced annualized returns of 21.84% during April. That trails only December in terms of best monthly performance with respect to the small cap index. This is John Hopkins. I'll be back tomorrow morning with another Market Minute.